Gave it all right back.
But I got to tell you, the EMPs look okay. I
I
mean,
mean, they're hanging in there.
Yeah, well, because nat gas is just ripping.
yeah, even the oil services name Schlumberger looks like it's getting off its tail.
Well, I think that might be also because they're talking about swapping out Maduro, and like I talked about that the other day with Rupert, and they basically have no infrastructure there, and they
Yeah.
have all the oil. Imagine the contracts that could be had in Venezuela if they can just get rid of that turkey, and then swap them out with some guy who's energy friendly. It could be like a wet dream for Weatherford
Like the one that won
and
the election.
Schlumberger.
That one,
What?
like the lady that won the election.
No, what? No, I'm talking about basically that they're gonna swap Maduro out out
No,
of Venezuela.
Maduro basically invalidated an election. Did he not?
Yeah, of course, but they're gonna get rid of him. They gotta get rid of him, and they gotta like put somebody in, or just like do an old fashioned regime change, Iraq style, like something from that to like much lesser. Somewhere in that regime or in that window is kind of what it looks like is going to happen here, for better or worse. I'm not endorsing. I'm just saying that would be good for oil services stocks. That's all
I'm
trying
not
to
giving
say.
you ideas, Mr. President Trump.
Didn't Trump tell Maduro to flee the country or something like that? He
Yeah,
was coming to get
yeah.
out.
He tweeted it out. He tweeted
Yeah.
it
Look at
out.
you rocking the Einstein bar brand. Good for you.
I mean, I'm an owner of it, so I have
Good for
to.
you. Good for you.
Well, I don't have to, but I like to.
I'm giving away. They're getting big reviews. Big reviews.
They're
They're
good.
good.
They're
I got my taste. They're good. I like them.
I
but I
like
just-
it also. You know what? It reminds me of Kit Kat bar a little bit.
Yeah.
A little bit. A little bit.
Let me tweet
What
this
kind of
out. Let's get
communist
this
doesn't
show
like
on the
Kit Kat
road,
bars?
boys. I mean, who didn't love a Kit Kat? What was the jingle for Kit Kats?
There's
Yeah,
a
anyone
jingle?
remember?
I don't remember.
Yeah, you remember they used to have Kit Kat commercials when we were young. I can't remember. I know Snickers was a popular one. Double mint gum. That was a big one to remember. The jingle there.
It was break me off a piece of that Kit Kat bar.
Kit
There
Kat
you
bar.
go.
See, look, the producer
There
Jen knows. Thank you, Jen. That would have been on my mind. I couldn't have focused on
You're
the
welcome.
show.
Now
All right,
you
let
can
me.
have a fantastic show.
A great show. Yeah, here we go. Hang on. I'll just retweet
I don't
this
know.
and
When
we'll
you ask
get
for
going.
jingles when we were kids, I always remember the Frito Bandito.
The Frito Bandito?
Yeah.
I don't remember
remember that
Frito
one.
Bandito.
Give me some corn chips and I'll be your friend. The Frito Bandito, you must not offend.
Maybe I was
You don't
too young
remember?
for that
I mean,
one.
you're too young for that one, I guess.
Frito Bandito. I did like Fritos though. All right, let's roll.
I'm pro
Let's roll.
Fritos.
Let's roll with this. We gotta get this show on the road. I got a call
I'm
after this.
talking about Fritos.
All right. It is December 2nd. It's getting colder. It's going to get really cold here this weekend as an amuse-bouche for how cold it's going to be. And I'm Ben Brey. Kevin Baker's on my right, and Bob Morris is on my left. And so, Bob, let's talk about that. There was an article going around from some of my power trader guys the last couple days, and then I saw yesterday it's starting to make its way onto Twitter and even the New York Post. Let's talk about this cold that's coming up here and the impacts on energy markets.
Yeah, timing is good for cold weather. We've always said that the market tends to make a bet on the entire winter by the first, second week of January, whether it's been colder than normal or warmer than normal through the winter at that point. So getting some nice cold weather here in December is a big plus for looking through to the entire winter period. The EIA came out with a forecast for the winter for natural gas, which I thought was too low. I think they said it was like 390 or something, but it's too low. But the one thing is we've got natural gas storage levels in the U.S. now slightly below a year ago, although they're above the 5-year average. But as we've said before, the big swing factor will be the weather. So if we get some really cold weather, and it looks like we're going to, particularly in the Northeast, that's a big plus for bringing down those storage levels, boosting demand for natural gas, and underpinning this higher natural gas price, which if you look at the front month contract right now, as you pointed out, it's just under $5, which is big. I mean, that's a front month contract. But even if you go out to March, April, we're 386, 372. So those are very good prices for natural gas here. And we just need to see the follow through on the weather, see those storage levels drawn down, and see the demand. And that's why you've had such a big run in some of these natural gas names that have been our favorites that we've been pounding the table on. Expand Energy, EQT, those names just can't stay down. Every time they open down, they bounce back up, and they're doing the same thing this morning. And I mean, EXE's more than 20% over the last 2 months, I believe it is. Same with EQT. So these natural gas names have really gotten a boost from this outlook for the weather and that uptick in the natural gas price. At the same time, we're sort of riding this geopolitical roller coaster on crude oil prices, where we're up one day, down the next. Up yesterday, primarily on this Ukrainian drone attack on some of the Russian export facilities, which are back up and running today. This is not the first time that that's happened. Oil price pops, then comes back down when everybody realizes that the oil's still loading, or they're back to business as usual. And and the other thing was that OPEC over the weekend said they reaffirmed, which you already knew, they'd already said a month ago, that they were going to pause any continued production increase through the first 3 months of next year. So they're not going to be increasing production January, February, March. Beyond that, we'll see. But while they've been trying to regain market share, like we've said, they are defending this oil price, I believe, at around $60 WTI. But then today, we're back down a little bit. Like I said, that oil's flowing again. OPEC news was not real big news. I think further down the list on concerns is this whole situation with Venezuela, where Trump has said essentially the airspace is closed over Venezuela. And so there's concern that that oil production ultimately could be impacted, which could go either way. As we talked about before, Ben, initially, if there's some sort of land incursion by the U.S. to take out these drug cartels and that interrupts the operations for oil production, longer term, if there is a regime change and investment is opened back up for Venezuela, you've got names like Chevron that would benefit in being able to have more access to the infrastructure and improving that weak infrastructure for oil in Venezuela, making investments there to increase oil production. So, that's something that could cut either way in the long run. But in the meantime, like I said, oil prices go both ways. And the other thing here that's going to be a big factor is these discussions or negotiations between Russia and Ukraine. And those are likely to drag out here for a while. But on the one hand, if you do get a peace deal, something's agreed to, that will open up the spigots for Russian oil to flow more freely without any sanctions by the U.S. Currently, in opening up some of those exports of that oil to more freely enter into the global market and be able to be exported to India and so forth, which would be a negative for oil prices. On the other hand, if there is no agreement, and this conflict continues, there's going to be back and forth. There's going to continue to be drone attacks by Ukraine on Russian oil facilities and so forth. So it's a lot of back and forth, a lot of geopolitical variables out there. It's my point that could go either way. Bottom line, the E&P stocks seem to be holding in very well. The names we've talked about, CNQ, Chevron, Exxon, these stocks are up year to date. And they're holding in very well. And, CNQ yesterday, I think that was at a year to date high. And I don't know how far back we have to go on that to see the high. I think Bakes has got the chart put up there. But, that name has been acting extraordinarily well. Now, granted, they're a big natural gas producer in Canada, too, so they benefit from the natural gas side of things. But those names, the energy names, have held in very well. And I think, as Bakes was talking about earlier, some of the oil service names have held in here, too, because I think investors sort of see that we're probably near the bottom as far as activity being cut back and the reductions that these companies have had. And going forward, that if you've bottomed out in that spending, that activity, ultimately, that should benefit the oil field service companies, particularly along the international front, particularly as we talked about, if at some point Venezuela opens back up to spending. But in the meantime, I think the more intriguing aspect of the market is natural gas, has been pointed out, and how these natural gas names benefit if we get this very cold weather that continues to support natural gas prices through the winter. And again, our favorite names are expand in EQT. I'm not doing anything today with those names because I'm already overweight the names. Happy with the positions, but we'll see if we were to get a sharp pullback whether we do anything or not. But just holding on to my positions right now on these names.
All right, but encouraged basically.
Yeah, I'm encouraged. I'm very encouraged with these names holding in as well as they are. With oil down here, I think it was down 3 weeks in a row as of last Friday, maybe 4 weeks in a row, and continuing to dip below $60 a barrel, that the names have held in as well as they have. And then on the natural gas side, yeah, we're, I don't know if we're rooting for cold weather, but because I live in the Northeast, but the cold weather is certainly coming through and benefiting those names, no question.
All right, cool. All right, Kevin, what do you got for us today, buddy?
I have Hi-Ho Silver, and I've been talking about this for a long time. I put something out again from October 1st. I've owned this way before that, both Sprott Silver Miners, SOVR, and SIL, another ETF that invests in relatively small silver miners. That's from Global X, that's SIL. But SLVR owns about 18% physical silver, hit new highs yesterday. The volume's very good. And I said back in the October video that I just put out again, and we reposted it. Silver above close above 50, hold your popcorn, or pass the popcorn. And I think we're going. I mean, when you take out a 45-year high, I think you're going to see more follow through, and gold is holding in there, and people are grabbing a related asset class. And I'm a little concerned that I didn't see more yesterday, and I don't like the pullback today with spot silver, being in the 57s, and then it was 58 when I signed off to do the show. But I think the more time it spends now above 54, the path is up until proven otherwise. So I'm staying long. I've got two 10% positions. As they swell to 13, 14, I peel them back to 10. And when I double my money, which I'm close to doing, not close to, but I got a ways to go with SIL. But when that happens, I'll sell half and let my winners run.
For what it's worth, we put on a risk reversal yesterday in an SLV. We sold the 58.50 calls to fund the 50 puts for January 16th. And it was actually costless, or close to costless. So I'm on the other side of you on this one, Banks, buddy. I think this
I knew you would be.
Shot its wad. And that's an interesting trade if you want to take the other side. Which it's not without risk. Obviously, funding with a call can be dangerous. So I'm not saying that, but I do think that the RSI kind of looks like it's diverging from it. I think that it's not trading well to gold, and I wish I would have brought this chart, but the next Bakes, I'll send it to you offline, and I'll send it to all the chat. But the one chart I put up this weekend was that gold to silver ratio tends to implode near historical peaks. So you have gold to silver imploded basically in late 70s. You had it the same thing in 2011. You had a local in 2020, and the way I interpret that is that it's the final leg of a massive precious metals move. It could be local, it could be long term, but silver's kind of risky, whereas gold's much safer. And so, the times when you see the gold to silver ratio peak is like 2008 and 2020, and times when people are really, even last spring, gold to silver was at 105 ounces in April, right? So it's just worth noting that the historical trend is silver blows off near the end of moves, not the beginning of moves.
What's your time frame?
Keep going, buddy.
Well, what's your time frame?
Wait, January. These calls that we sold to fund the puts expire January 16th. So that's the beauty of options. You have a time horizon labeled to it.
Okay. Yeah,
No, we'll see. We'll see. We'll see. I mean, like we could get dirt napped and ran over on it. It seems like it's gold's not. Where's gold this morning? Pull up gold, Kevin. Let's see where that's at.
I don't have I don't have that. There's
GLD.
42 some on it. What I find interesting
Yeah.
is that silver's
So
getting.
gold's down today. Gold's down 1%. Silver's
Yep.
down 1% today. So I don't
Yep.
know.
Silver's
I'm,
down 2%, isn't it? Yeah, silver's down
Keep going,
2%.
Kevin. Sorry.
yeah,
2%. Silver's down 2%.
Yeah.
I'm intrigued by, and I don't know what to do with this yet, but silver's hitting new highs, gold and platinum are not, and that divergence I find interesting. I don't know how, maybe it gets resolved, maybe it doesn't, but I'm sticking to my sell discipline with the silver. I just outlined it, and I hope this is going to be a year plus. It goes to long term capital gains. And you make money in January, and I make money in January of 27. I know,
Well,
I know.
well. The thing is that there's definitely something going on with the comics, and there was this, guys who wanted to have it delivered. So the idea that people are thinking is they try to jack or create a short squeeze. But the thing is like the open interest on silver is roughly just on the comex, not including the Shanghai or the LME exchanges, about 71 billion. But remember,
Mm,
silver is also a 3.2 trillion dollar asset class, right? This isn't small. This is like the equivalent of a Meg 7 stock, one of the biggest assets in the world. Now it's not in the same league as gold, but I would just say that like sometimes these things get ran up, like gold when it went from 4,000 to 4,400 and like I don't know what was that, like a week or 4 days or something,
yeah,
and then it gives it all back real quick. So you just got to be careful in some of these. I mean, since November 20th, silver's up 20%, although I guess less 2% today, Bob. So 18%. But yeah, these are just wild moves for $3 trillion asset classes. Is all I'm trying to say.
yeah. And my thing is very simple. We had the hunt peak in 2080 at 49 and change. We had the '07 peak at 49 and change, and we just took that out. And to think that 40 years of momentum is going to stop today, I just tend to doubt that. I just tend to doubt that.
Um, yeah, keep going. Let me see
Okay.
if I can find this chart and I'll send it to Jen. I want to show you this actually.
Okay.
Keep going.
This is Uber. I liked Uber before. I no longer do. This is closing below the 200 day. I'm not going to draw arrows. I don't have the patience. Um, uh, 200 day is violated. And then this is kind of classic. And I can't short individual names. So full disclosure, I'm not short and I can't short. But you had earnings that didn't dazzle anybody. You've got follow through close below the 200-day moving average on big volume, and then you have feeble bounces into the resistance of the 200-day and all this resistance back here. That is pretty classic. That's a decent short point if you look at the Edwards and McGee books of yore. So, and again, I've done no fundamental work on this, so another full disclosure. But this is looking like it's a little sick.
Yeah, I bought that. Jeff Mackey got me long that. I was like, okay, and then it kind of was sitting there, and I just kind of kicked it out when things were starting to sell off, and I was like, whatever. But I kind of like Uber. I mean, I use Uber more. I now since I moved to LA, I use Uber a lot more than I ever have. And I don't take Uber rides. I take the Waymo rides, but I think I use
Mm.
the Uber Eats all the time. So I don't know. Yeah, I don't know that stock.
And
I think it's competitive space, right? Like Amazon just announced they're going to do these 30-minute deliveries. Instacart's in the game. Yeah, maybe it's just that it's the degree of competition. Waymo, obviously.
yeah, and I'm very wary of, I call it the Peter Lynch effect. Oh, I know it, so it's a good stock. I use the company because it's a good stock.
Yeah.
It's become a verb. It's a good stock, and I just say the chart's telling me this is no longer a good stock. It's possible that all this resolves itself and it reverses to the upside, But that's the beginning of a change to downtrend that I see right there.
I would tend to agree with you, Kevin. That doesn't look great. Like that doesn't look like something that like I'm like, oh man, that's bullish. Like unless you have an
Yes.
event now that you expect that can, spike it up. Okay, Jen, we found the chart, Kevin. Let's bring this up so I can show you what I was talking about. All right, so I made this weekend. So the black line is the gold to silver ratio. These are on a log scale just to make it a little bit easier to read, so it's not the spikes. And then
Okay.
gold is the gold line, and I don't know why I didn't make the silver a silver line, but silver is red. So you see, basically, we're near that peak, that $100, ounce gold to silver line. And but you see how in '79 spiked down, and then you had in 2011 the black line spiked down, and then you had a local spike down, right in 2020. So who knows, right? I just was very interested that these sharp appreciations in silver relative to gold, or decline in the gold to silver ratio, whichever way you want to say it, tend to be near peaks. Now that could keep going. This chart isn't as good because I don't have the drawdown in it. Typically, the average drawdown level of from the peak, so around 100 or so, down, is about 50 or 60%. So yeah, right now we're at 35. So you could have some blow off top as you kind of are prescribing, Kevin. But just worth noting, I thought.
Yeah, do me a favor, send that to me. My tired old eyes can't read all those numbers, but send it to me. I love, but I listen to everything, I've got my discipline. I'm sticking to it. To me, that looks like a massive cup and handle and a fresh 45-year high. So that's I love that stuff. But
Well, no,
I
but the black line's what you want to pay attention to, right? It's not the
I
line on the bottom, right? The line on the bottom, you would expect that line to go up over time because of, increased balance sheets, increased credit, increased money supply globally. I mean, you know, it's absolutely ridiculous to think that silver was $50 in 1979 if you really think about it. Like in today's dollars, that would be like 200 or something like that
Yeah,
to get you
and
pulled up, I guess.
I'm wary of ratios because you can have resolutions on the denominator or the numerator, and so I don't
That's the
really.
same in all prices. If the dollar goes up, you have the same thing. Why do you think assets go down when the dollar rises? Right? You can have that.
I guess taken to as everything's a ratio, but I just I still stick to the chart and the premise. So, but
Okay,
I
keep
want to
going.
look at it and we'll talk.
All
I
right,
got
keep
one more to
going,
get
and
done.
then let's get out of here after that.
All right, I know I thought you wanted to talk about one more, but hold on.
No, no, I'm saying
Uh,
let's keep the wheels rolling.
okay, the wheels are whirling, except for defense stocks. That has changed.
Oof.
This is the select stocks euro aerospace ETF. You've got to close here. I won't do it for the benefit of time, but Rheinmetall, RNMBY is the ADR. That looks like it's taken on a lot of water, and I don't know if peace is breaking out. I don't know if it's fund flows or both, but the defense stocks and the U.S. names largely look the same. So I'm looking at. I go through 5,000 plus charts. I got to do it again this week, and the defense names have turned to the downside, in my opinion.
It doesn't look good. Bob, what do
No,
you think of that chart? That chart's one of those charts that's binary. I think you're either gonna really
Yeah,
be happy you bought it there.
I mean, it's just again, it's is peace breaking out or what's going on here? I mean, I'd look at Raytheon, I look at Lockheed Martin. I've got positions in those names, and they pulled back here in the quite a bit in the last month or so. But I mean, the market, like Bake said, but the market's sort of telling you here that peace is going to break out. I don't know.
He's dividend, except for these guys. I've never owned a defense stock in my life, and obviously they should have. They've obviously been fantastic stocks over time. Um, but like, man, I do remember. Do you guys remember when Obama first came in and he was talking about cutting defense? They can be
Yeah.
subject to like a bit of a every once in a while if the budget gets screwed up or they get like some narrative, like they can get these periods. But over time, those are usually buying spots, aren't they? Like, isn't that kind of in the
They tend to be, especially solid names like Lockheed Martin, which I own it because it's part of my dividend discipline and it has a nice yield to it. And then, I just rolled, what was it, November 440 calls to January 440 calls for a nice premium. So that's sort of, the stock is pulled back from, I think it was at 460 when I rolled those. And it was at 455 when I rolled those, and now it's back down to almost 440. So, but it's from a dividend perspective, it's a nice name that you can sell vol against, when the stock runs up. So it's still a name I hold. I'm not going to sell it, but I like it from that perspective.
Check out this. This is Ryan Mattal. I hope I'm pronouncing that correctly. I think I am, but and it might just be perspective. If something goes up 3x in a year, okay, yeah, people are gonna look for excuses to take profits. I think taking profits in December, makes that premise a little bit suspicious. But and again, I look at this, the down volume down here at the lower right is picking up and noticeably. So this guy showed up on about 11 podcasts, and I'm also drawn back to, I think, the defense stocks. The last time they peaked on September 12th, 13th, and then they did nothing for years and years and years. So um, uh, something has changed here to the negative, in my opinion.
Yeah. And these stocks have had, not Lockheed Martin, but Raytheon's had a huge move the other day too. That's almost out of my screen for the dividend because it's had such a huge move. The dividend's down below 1.5%, which, and that
Yeah,
at those levels, I should be lightening up.
yeah, this has been a huge
all
move.
right? All right. Anything else? Oh yeah, let's look at that one that I sent you, Kev. That little small cap levered consumer name.
This is right. Bath and Body Works,
Bed Bath,
BBWI.
Bed Bath and Body Works and or Bath and Body Works, sorry, which was a spin-off of Victoria's Secret. Tell me how much you hate that chart.
Uh, you know, I wouldn't, for an investment. I wouldn't stop here for a trade to close this gap, especially with the volume picking up. For a couple of weeks.
Insider volume also. Insider buying volume as well.
Yeah.
And
New
people love the
insiders, new
malls
management.
again.
Is it new management?
Did you guys know that kids love the malls again? Apparently, that Abercrombie. So pull up Abercrombie and Fitch. Actually, let's look at Abercrombie and Fitch for a second. Another mall retailer,
Yeah.
A&F.
Oh, I know.
That was a terrible looking chart, and then boom. That. So I hear you with that. Like it's levered. They have a decent Christmas. Like and insider buying. That's the idea, but it's a terrible looking chart, Kevin. We can agree on that. It's down and to the right with leverage tends to be a not a great place to be in stockland
Yeah,
for a volatile business.
yeah, and they had a good earnings report, at least versus expectations, according to, I don't know if it was Mackey, Marson, or Berner, or all three, but they've been talking about this. And I just
Yeah.
like to, I get it's probably going to build a base here, and then we'll see how if it breaks above this 105 level.
Look, it's like 5 or 6 times free cash flow. It's very cheap, but it's got leverage, and so it just is like if everybody's excited about the malls and spending, it's interesting. I've been seeing this data. Salesforce came out with something similar, but like the Amazon data, 7% price growth, but 2 to 3% volumes down. And that's just such a gross reality, honestly. That is just stagflation. Like,
Yeah.
and it makes me not dislike, but I don't like my bonds as much in that world. And so, yeah, I don't know. We'll see what happens, but not great. All right, is there anything else, guys, you want to talk about, or let's get out of here?
Let's rock and roll.
All right. Well, thanks for coming and checking out with us today. It's enjoy your December 2nd. I am Ben Brey. It's Bob Morris, Kevin Bakes Baker. Come check us out on WallStreetBeats.com or StreetBeatPros.com here on Twitter, and we'll check you soon. Later.
Thank you, folks. Thank you, Jen. I got to
All right,
hug you.
guys.
Thanks a lot.